If trading were purely analytical, the smartest people in the room would dominate the markets. Every engineer, every math major, every finance graduate with a perfectly built spreadsheet would already be financially free. But that's not what happens. Plenty of highly intelligent, analytical people step into trading, and they struggle. Some of them blow up accounts just like everyone else. Why? Because trading is not an IQ problem. It's a behavioral problem. On the surface, trading looks like the perfect game for analytical thinkers. You've got charts, probabilities, statistics, backtests, indicators, models. It feels logical, structured, measurable. So naturally, smart people walk in thinking, I'll just follow the numbers. And for a short time that works. But then something strange happens. 2 or 3 weeks later, they're revenge trading. They're moving stops. They're doubling their position size after a loss. They're breaking rules they personally wrote. And they say the line every trader eventually says, I knew what I should have done. I just didn't do it. That sentence explains almost everything. Most traders aren't failing because they don't know what to do. They're failing because they don't do what they know. Think about your own experience. How many times have you nailed the analysis? You marked the level perfectly. You predicted the move. You told your friends where price was going, and the market did exactly what you said it would do. But here's the uncomfortable question. Did you actually make money on that trade? Maybe you hesitated and missed the entry. Maybe you entered but exited early because you got nervous. Maybe you held it too long and watched a winner turn into a loser because you convinced yourself it would just go a little further. This is the gap nobody talks about enough, the gap between being right and being profitable. There's a massive difference between being a good analyst and being a disciplined executor. And most traders live and die in that gap. Let's walk through a typical trading day. You wake up, you check the charts. A setup starts forming, it checks all your boxes. Structure is clean, risk-reward makes sense. The signal aligns with your strategy. On paper, it's a trade you should take. But right before you click the button, your mind starts racing. You remember the last time you took a similar setup and got stopped out. You think about your recent drawdown. You think about your bills. You think about how bad it will feel if this one loses too. Now you're no longer analyzing the chart, you're negotiating with fear. Your finger hovers over the mouse. Instead of executing your plan, you hesitate, or you wait for more confirmation, or you skip it entirely. Then price moves exactly how you expected it, and now you feel regret. Or maybe you do take the trade, but once you're in, every tick against you feels personal. Your heart rate rises, you check your P&L constantly. The take profit that looked perfectly reasonable 5 minutes ago now feels too far. You start thinking, maybe I should just lock in a small win. Nothing about the chart changed. Nothing about the structure changed. The only thing that changed was your internal state, and that's the whole point. Trading is more behavioral than analytical because your decisions are filtered through emotion. The chart is external. Your response is internal. You can spend thousands of hours mastering technical analysis. You can understand structure, volatility, probability, and still struggle. Because if you can't manage your reactions under pressure, none of that knowledge matters. Your brain wasn't designed for trading. It was designed for survival. Thousands of years ago, reacting quickly to threats kept you alive. But in trading, that same wiring works against you. When you take a loss, your brain interprets it as danger. Stress hormones spike. Your body moves into threat mode. And in threat mode, you don't think statistically. You react emotionally. That's why revenge trading happens. A loss feels like something was taken from you. Your instinct is to get it back immediately, to restore balance, to prove something. The market doesn't know you exist, but your brain treats it like a rival. And wins can be just as dangerous. A few winners in a row and suddenly you feel invincible. You start bending rules, increasing size, taking trades outside your plan because you're in sync. That's recency bias, and it destroys accounts quietly. Here's something even more subtle. Your discipline changes depending on your mental state. Early in the day, you're sharp, focused, calm. Later in the day, you're tired, maybe bored, maybe slightly frustrated. You start forcing trades. That's decision fatigue. Every decision drains mental energy, and discipline requires energy. Professional traders understand this. They limit their sessions, they limit their trades, not because there aren't opportunities, but because their behavioral capacity is finite. Now imagine two traders with the exact same strategy. Same rules, same entries, same exits. One makes money, the other loses money. The difference isn't the system, it's execution. The profitable trader takes every valid signal, cuts losses where planned, holds winners to target, maintains consistent size. The losing trader skips uncomfortable signals, exits early when nervous, holds losers too long, sizes up emotionally, sizes down fearfully. Same strategy, different behavior, different outcome. And this is where the real shift happens. If behavior is the bottleneck, then improving your trading isn't about finding something new, it's about becoming someone new. You don't need a new indicator, you need better execution. You don't need a more complex strategy, you need stronger discipline. Ask yourself this: if you followed your rules perfectly for the next 100 trades, not 10, not 20, but 100, what would your results look like? No moving stops, no cutting winners early, no doubling size out of frustration, no skipping valid setups because you're scared, just clean execution. Most traders have never seen what their true edge looks like because they've never executed it cleanly over a large enough sample size. They sabotage the data before it has time to work. This is why journaling behavior is more important than journaling P&L. Instead of asking, "Did I win?" ask, "Did I follow my plan?" Because if you win behaviorally, the money eventually follows. When you detach from the outcome of any single trade and focus purely on execution, something changes. You become calmer, more stable, less reactive. You stop trying to control what you can't control. You can't control whether this trade wins or loses. You can't control volatility. You can't control news, but you can control your size. You can control your stop. You can control whether you take a valid signal. You can control whether you walk away when there's no edge. And that's enough. Over time, trading becomes less about predicting and more about executing, less about being right and more about being consistent, less about intelligence and more about discipline. So if you've been frustrated because you know so much about the markets but aren't seeing results, maybe your knowledge isn't the issue, maybe your behavior is. And here's the good news: behavior can be trained. It takes repetition, it takes humility, it takes the willingness to feel uncomfortable without reacting. But once execution becomes automatic instead of emotional, trading feels different, quieter, more controlled, less chaotic, and that's when you realize something powerful. The edge was never just in the chart. It was in you. The market doesn't reward the smartest trader in the room, it rewards the most disciplined one. And discipline is a behavioral skill. Master that, and everything changes. But let me leave you with something practical. If you truly accept that trading is behavioral, then your daily focus has to shift. Instead of asking, "What's the market going to do today?" start asking, "How am I going to behave today?" That's a completely different mindset. Before the session even starts, decide who you're going to be. Are you going to chase moves out of boredom or wait patiently for structure? Are you going to size up emotionally after a win or stay consistent no matter what just happened? Because every trading day is less about prediction and more about identity. Who are you when you're up? Who are you when you're down? Who are you after 3 losses in a row? Who are you after 2 big winners? Most traders don't fail because they lack intelligence. They fail because they lack emotional stability under pressure. And here's a truth that might sting a little. If you're constantly switching strategies, constantly tweaking indicators, constantly searching for something better, it might not be because your system is broken. It might be because your behavior is inconsistent. It's easier to change the strategy than to change yourself. It's easier to blame the market than to admit you broke your rules. It's easier to say this setup doesn't work anymore than to admit you didn't execute it properly. But the moment you take full ownership of your behavior, everything changes. Because now the solution is in your hands. You don't need better entries, you need better discipline. You don't need more knowledge. You need more consistency. You don't need a breakthrough strategy. You need breakthrough self-control. And here's the powerful part: discipline compounds. Every time you follow your rules despite fear, you build trust in yourself. Every time you take a clean loss without revenge trading, you strengthen your edge. Every time you sit out when there's no setup, you reinforce patience. Those small behavioral wins stack up quietly and powerfully. Eventually, something shifts. You're not anxious anymore. You're not glued to your P&L. You're not reacting to every tick. You're executing calmly, methodically, consistently. That's when trading stops feeling like chaos and starts feeling like a business. So if you remember nothing else from this video, remember this: the market is not testing your intelligence, it's testing your discipline. Intelligence might get you into the game, but discipline is what keeps you in it long enough to win. Focus on behavior, because that's where the real edge lives.